On and have some market conversation. The Nifty today, it is range bound, 31 points higher, but the markets of late have been in focus for a number of reasons: geopolitical tensions. We've been talking about Indian earnings and the global backdrop as well. Hemant Kanawala from Kotak Mahindra Life Insurance is joining us now to discuss market fundamentals and his top sectoral picks. Hemant, good morning. Thank you so much for joining in. Well, you know, the big event in terms of earnings is behind us now. You say that valuations are not the real reason why you would look at any sector or specific bet. So in terms of earnings, anything that stood out for you, something that you discovered would continue in terms of growth going forward as well?
I think so. The surprise of this earnings season has been on the IT side, where we entered the season with somewhat muted expectation, but the companies have delivered better than that. And going forward, on the back of expectation of rate cut in USA and also soft landing in USA, we believe that IT demand should pick up. They've gone through a good consolidation phase in the last 2 years, where the demand has been muted, and so companies have done a lot of restructuring at their end also and become more efficient organically. And so we believe IT sector can continue to do well going forward also. So that is, I think, so one sector which stood out in our view.
Is that an overweight in your portfolio? And in the IT stocks, large caps, mid caps, which ones would you bet on and why? Because there's also that ER&D services where names like KPIT Tech have had a runaway rally.
Yeah, so we are evenly poised on both the segment because large companies have an advantage of better valuations, and they will also benefit from the segment, because what is happening is that the expectations are that the BFSI segment should pick up in USA on the back of more regulatory spending by the banking companies there, and if there is a rate cut, that also helps the banking sector in USA. So if that happens, then most of the Indian companies are reasonably exposed to BFSI segment, and so it will help most of the companies in India. So we are playing both large caps and mid caps. With regards to ER&D space, obviously it's a very attractive opportunity. We don't have any large presence there, but yeah, that offers a good opportunity for the Indian companies focused on that segment.
Okay. The other theme that you are positive is on some of these emerging themes, renewables, be it new energy. This is, of course, the big theme that we are talking about going forward. But do you think this is something which will play out in the immediate future, say 4 to 5 years down the line? Or is it a longer term story that an investor should look at?
So I think so. That theme is playing out in phases, so that every phase a set of companies may benefit, or as the company progresses, then they may continue to benefit from it. So like if you go to electronic manufacturing, as a theme, then it started with just assembling of mobile phones in India, and there are a set of companies who benefited out of it. Now the government is looking at whether we can get into semiconductor or the components part of it, and they are rolling out incentive plans for that. Now either a new set of companies will benefit from it, or the existing companies can also start tying up and get into that space also. Like in a mobile, 50% is component and 50% is semiconductor, and government is rolling out incentive plan for both the things. So now there are different set of companies which will benefit from that move in this. So there are companies who have applied for incentive plans on the semiconductor side, and they will start playing out. Similarly on the renewable, it started initially with wind, solar. There is a lot of action happening, and government is trying to move into backward integration everywhere. And at every stage, either the same set of companies may benefit, or there will be new set of companies who have been working on it and will benefit out of it. So it's an evolving space, but two things are happening. One is the globally the environment is changing. People are focusing on renewables, electric battery, vehicles. So all those things changes are not only in India but happening globally. And today India has an advantage that we are at the forefront in this technology change. So normally what used to happen is that traditionally India will participate, say like mobile phones were introduced as a technology in early 90s globally, but it came to India only in late 90s, and we were late in adopting. So we were never able to benefit from that ecosystem. But today, as the things are changing globally, we are also able to participate. So there will be companies which will come from India who can have a very exponential growth as they participate. So it's a both import substitution story as well as an export opportunity which comes for India.
Okay. The other thing that you like is the generic pharma space. What's working out here for you? What do you think could be the next trigger of growth for the pharma space in general? Because we have been talking about some of these companies getting warning letters, US FDA inspection. There's a lot happening in the space.
Yes, so last 10 years has been very difficult for pharma sector, where a lot of regulatory action happened on Indian companies. Maybe there were some lapses in their processes, and which they worked upon. And I think so they have evolved much better and stronger in those changes. But going forward, there are shortages of drugs in USA, and I think so USA is looking forward to beef up the generic supply there. So they are having a favorable outlook, and the generic drug pricing is improving overall. So that will benefit the Indian company. But more importantly, what is happening is that in USA in the current year, they will pass Biosecure Act, which efficiently means that you have to diversify your APIs supply base away from China. So there is a big time frame of around 8 to 10 years to do that. But we believe that incrementally, every US company will start looking at alternate sources away from China, and India should be a big beneficiary of it. So I think that will be a large theme which will play out, and the Indian companies again who have been working on it for years, particularly in the API space, will benefit out of it in a significant way. And so that we believe it's a large opportunity to look at it.
Banks, out of I think the last 4 or 5 years, they've given return in I think 1 or 2 years only, and it's frustrated a lot of investors because you see relative value in it. And they've gone through a Goldilocks period where growth was high, asset quality was under control, and yet the stocks didn't outperform the market. Where do you stand on banks right now, and what would be the best approach?
So, against the contrary view, against the popular view on the market, we are somewhat cautious on the banks because we believe that the regulators want the growth to slow down. So it's not that the growth is going to collapse, but credit growth at the margin, which was north of 15% for last 2 years, will come down because the regulators want them to work on the deposit side. So they want credit deposit ratio to improve, and that's where credit growth will slow down, and they will have to mobilize more deposits. And deposits are hard to come by, and so they may have to pay higher price for it. So you have a slowing credit growth. NIMs may at the margin come under pressure because you are having historically high NIMs. And so there is will be a tendency to give up a bit on margin to shore up the deposit because that is what the regulator wants. And even on the asset quality side, we had the best of the cycle. So we are having one of the historical lowest asset quality today. There are no immediate signs of worry, but it is normal to assume that credit cost will increase over the time as the economy and the current book starts maturing. So we believe that against the banking, nothing wrong, and maybe on an absolute basis they will generate returns, but on a relative basis, banking sector may like the other exciting and interesting things happening in the market and the economy.
Okay, all right. Take that point, Hemant. Very interesting chat and some of the new sectors that you spoke about that could be in focus going forward as well. Thanks a lot for tuning in. That was all about market fundamentals. But for now, we'll step into a break. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned.